Hey everyone, this is Gilberto with Maverick Media Lab, and I'm here with Alan Berkovitz, the owner of the Complete 1003 software and expert in getting loans closed. Very high success rate for those that use his software. And he's going to be talking about really like what it takes to ramp up loan officers. You know, he's had 40 years of experience in the industry. So he's going to be covering what it takes really to ramp up loan officers to get them to the point where they are not dropping the ball on loans. This is super important for loan officers that have those realtor partners. That'd be a very easy way to lose realtor partners. I know a lot of our clients in the past, when they were beginning, would lose a lot of deals and also realtor partners with just one loan that closed. So it's a very important thing that you do, Alan, and I think it's definitely going to bring a lot of value to those broker owners that are listening to this, branch managers, anyone who's managing a team of LOs or even new loan officers as well. So I really appreciate you hopping on and sharing your time with us, Alan.
And I appreciate you having me on, Gilberto. It's been nice to meet you, and I'm looking forward to working with you in the future.
Likewise. So just so the audience kind of has a little bit more like info on what you do, your background, can you kind of just give us a little bit of introduction on yourself and how you came up with the Complete 1003 software?
Well, I have a long history in originating mortgages myself, and in hiring and training and managing multiple branches of loan officers. And people say, oh, things are new now. You can't compare to when you used to originate, but some things are still the same. And what's still the same is that sometimes loan officers tell customers, oh, congratulations, you're all set, you're approved, let's get started. But they didn't properly qualify or originate the loan. And then the loan gets into underwriting and it dies. And the customer, instead of ending up in their brand new house, they end up living in a motel or in their parents' basement. And that hasn't changed in the past 20 or 30 years. So that disgusted me, because I get it. No loan officer signs off on their own work. There's always somebody behind that has to sign off, but they're really just checking the loan officer's work. That's all the underwriter's doing. If you do a really good job, if you identify every possible issue up front, and yes, you do have to have a good partner, because you don't want to be in a position where you're asking an account executive, how's this going to be handled? And they tell you it's fine. And then the underwriter pushes back and they won't step in. But again, it is possible to have every loan close with one or two touches and to not have any fallout. And that's my expertise. And I'm passionate about it. I just don't think it's right to treat the customer the way our industry treats customers.
Yeah, I can tell you're really passionate about it. Even like in our conversation prior to this, you were getting like really worked up. And even when you talked about it, like on our initial call, like I could tell, like, this is something that, you really are passionate about and like really care about, the clients and making sure that you're doing like an excellent job for them. One of the things that I was curious about, like, I would love to hear, like, why now is like, more than ever, like the realtors care about every deal going through, and like every loan officer now,
sure,
they want to make sure that no deal is being dropped because of like how the state of the market is right now, right? With interest rates hiking up and like it turning into a purchase market, all that stuff. What are some of the patterns that you've seen, right? You've been in the industry for a long time. Like, what are some of the patterns that you've seen recently with, just how the market is right now, and like, how does that kind of tie into what you're doing with the 1003 software?
Yeah, so we've got a lot of loan officers, been in the business for a year and a half, 2 years. A lot of them were doing a bunch of refis, understandably. Now, by necessity, they've had to pivot into more of a purchase market. It's an uphill battle. The realtors have somebody, you're trying to break in, you want to come across as knowledgeable. And there's really two problems can happen. One is, as a loan officer, you can get an application in and the loan could be closed, but you don't know how to structure it. And then somebody else goes and gets the loan closed. Well, that hurts your reputation with a realtor.
Yeah.
The only worse thing than that is to tell them you're all set, you can close the loan and have the deal blow up in underwriting. So those are the two issues that I'm trying to help train people to prevent from happening. And it just seems like help desks and mentors, company mentors within the company, they're just not getting the job done. In most cases. Occasionally, there's a really good mentor that's spending a lot of time. I had one woman decline to buy the software because she had somebody who was giving her 3 hours of time every single day to go over her deals with her. Well, most places you don't get that. So if you got somebody watching you 3 hours a day, you don't need me.
Yeah, what I initially kind of got like when I first came across your system was that it basically duplicates you, right? Like it's almost like if they had like Alan like physically there, like, hey, don't do that, like, hey, don't do that.
Yep.
I'm curious, just because I don't have as much experience as you do or time in the industry, like what is the impact like when they are able to get, these simple tweaks, right? Right for every loan, right? They follow the guidelines and all that stuff. Like what kind of impact does that make? Like, is it night and day? Like, is there any kind of percentages you can like share? And like, if they follow this, they'll get X% more deals through. Do you have any percentages like that?
I don't monitor the exact percentage. It's always tough to know, what kind of deals you're getting in. Are you getting, there's some deals can't be closed. So if you've got somebody
Yeah.
feeding you all loans that really don't qualify to close, there's a limit to what we can do. Some loans just don't qualify to close. But what we want to make sure of is if the loan can be closed, you close it. And if you say you close it, you're going to close it. Those are the two main issues that we want to do. And if you're not being watched carefully enough, if you're a new loan officer and you're on a Zoom training call with 30 loan officers for, 2 hours once a week, well, how much time do you really get? How much time do you get to watch your deals and to get your questions answered? And so the software, it gives you the opportunity to self-study, and then it also gets you one-on-one access to me so that I can be that mentor that maybe you're not getting enough of at your company. And it doesn't mean that you can't use your company's resources. It's just you now have some software that gives you self-study opportunity as well as direct access to me to let me help you with your deals.
One of the things, because you've been managing a lot of loan officers over your time in the industry, like what are some of the insights that you can share with the branch manager that might be watching this, or like maybe the owner of a brokerage with several loan officers? Like what are best practices for that recruiting process, like from sourcing them to like interviewing and then ramping them up? What are some best practices that you've universally seen work?
Well, again, as I mentioned before the call, my expertise is narrow but very deep. So I don't really think that I'm telling anybody on this call anything they don't know. If you watch that new loan officer closely enough for a long enough period of time, you can teach them what I teach them in the software. It's just, you've got to take that loan on as though it's your own loan. Because if you miss one little thing, that loan can either blow up or the loan could have been made and you missed it. So best practice is you watch the new loan officer until you're both confident that they'll come to you if they have a question. If you're confident and they're confident that if they tell a borrower or a realtor, hey, this loan can't be made, the loan can't be made. And if they tell the borrower or the realtor, we can close this loan, they can close the loan. If they have a question on either one of those, they can come to you as the manager, they can come to you as the broker owner. But that's the point. When you hit that takeoff point, that's when you really get the most out of your loan officers. And when the loan officers do the best for themselves, because now they can answer the questions on their own without, there's nothing wrong with saying, let me check sometimes. But what you don't want to have happen is where you're checking and then coming back and asking for more information and then another question, and now you're 10 days into the pre-approval and you're still going back to the borrower and asking questions. And we all know what happens. They lose confidence, rightly so, because the loan officer doesn't know what they're doing. They don't have somebody standing behind them, treating the loan as though it's their own. They've got a help desk or a scenario desk, but the help at a scenario desk is only answering what the loan officer asks. They're not looking in most cases at the whole loan. And I'm not talking about somebody that does a full underwrite with a to be determined property. That's different. But you got the realtor says, look, here's so-and-so customer. It's Thursday. I'm going to be taking them out to tour houses over the weekend. Can you get them pre-approved? You get in the 1003, you run the credit, you're on the AUS. There's something you're not sure about. You call the help desk. They give you an answer or what to ask the borrower. You ask the borrower. Now maybe it's Monday. The help desk says, oh, you forgot to ask them this. Now you're back again to the borrower. Meanwhile, they've been out looking at houses. You're coming back to the borrower the third time to ask them more questions. It's not going to be long before they flit off.
And I'm sure that probably has, like, I'm thinking that might have like effects in ways that might just ripple. Like, I'm thinking if that happens, like, it might just, number one, you lose like the realtor partner, but then it also ruins that company's reputation slowly over time, right? I mean, if it keeps happening, like, you know, people talk and all that stuff, realtors talk. So I'm assuming, like, have you had instances where, like, if, you know, this happens too much, like, it just starts to blow up and it creates like huge issues? Like, do you have any kind of stories you can share, like, where when they don't properly ramp up the loan officers, that where it just creates like huge problems?
Sure. I mean, the problem isn't quite so much if the loan can be done and the loan officer doesn't know how to do it and it goes somewhere else and they get it closed. Yeah, it hurts the loan officer and it hurts the branch to some extent. But the real killer is if you put that loan into process and when it gets into underwriting, it should have never gone in, it doesn't qualify to close. That's where we've naturally, people are reluctant to share these stories. And I'm not somebody that's like, oh, draw the pain out of them. You know, oh, the loan fell apart. What happened? The whole office said, the whole realtor office said they would never use our company ever again. And they've told all the realtors. Well, people don't want to say that, and I don't want to pull it out, but we all know that can happen.
Yeah, I've heard that from clients that where in the past that's happened when they were just learning and they were like new loan officers and they dropped the ball, and then, you know, realtors like just never work with them again, and like they tell their office and all that stuff.
Yeah.
So now I guess on the inverse side, like, what happens when they do have like when they do have like some sort of process, like whether it's like a software or even like just the manager consistently watching the loan officer, what happens then? Like, what are some of like the kind of success stories on what happens when there is a proper ramping process?
Well, the success stories, you know, are, and I don't think I'm telling anybody that's listening to this podcast anything that they don't know. So if you're a loan officer and you're carefully questioning the borrower, maybe some of your questions apply to the borrower, maybe they don't. I think I did mention to you right before we came on here. We have a customer that uses a software religiously. Well, not quite religiously, because every now and again they get lazy, they don't use it. So the borrower, the customer, my customer, called me up in a panic this week. They had somebody in the HVAC business. They were W-2. They had 40 hours every week plus overtime. They had been W-2 since the beginning of the year. They didn't need to use the overtime, so there was no issue there. You had 40 hours. The pay stub showed 40 hours every week. The VOE said 40 hours every week. And they had just come from being self-employed for several years in the HVAC business. Well, the loan officer didn't ask them, you know, like, when was the last time you filed the tax return? So it got into closing or into underwriting. It was a week before closing. Well, they hadn't filed the tax return since 2017. So first, my customer was thinking, well, maybe they didn't file because they didn't make enough money to do so. And their customer first was saying that. And then it turned out that they had a 1099 that was beyond the minimum level and they should have filed the tax return. So it's now the scramble's on. Will the CPA write a letter that even in the years that they should have filed taxes, that they had enough deductions so that they didn't owe any money? Will the underwriter accept that? Or are we going to be in a position where we're going to get 4 years of tax returns done in the week before closing? But if they just asked that question up front, the issue could have been dealt with up front. And then no customer is going to leave you if you say, look, just let me make sure. Now, when was the last time you filed tax returns? Oh, I was taking care of my father. He was sick. I wasn't making that much money. I haven't filed since 2017. Well, any of those years, did you make enough to have to file? Well, I think I did 1 year. Okay, so let's get that process going. Nobody's going to leave you over that. If anything, they're going to stick with you over that. But if you forget to ask them and now it's a week before closing and you come back, you may get that loan closed. But it's not a good experience for the borrower. It's not a good experience for the realtor. I mean, everybody on this podcast, we all speak mortgage. We all speak the same language. So again, that's what I'm trying to do. Make it go smoothly up front. Yeah.
What are the most, I guess this would be more for like, the individual Lowe's that might be watching this, or even some of the branch managers, like what are the most common ones in the process, right? Of like submitting before they submit it to underwriting and all that, like what are the most common, like the top ones that you see that if like simply they just avoided doing these, these things, like they would have more, more deals would go through? What are like those common ones that you come across?
Well, probably the most common one that I come across is the variable income. The customer says, oh yeah, I work 40 hours a week. And then the pay stubs come in. They had 1 week with 38 hours. That's typically because they haven't been at the company long enough to have any sick time. So they might have had to take their child to the doctor, and if they had sick time, they could have plugged those 2 hours in and still made 40, but they got 38. And now it's into the battle with the underwriter. Are they going to be using the 40 hours or even averaging the 1 week or the 2 weeks where they made 38? Or are they going to consider that they're a variable income borrower? And then they want to go back to last year. They had a different job, either with the same company or a different company. Last year they made $19 an hour. This year they're making $37 an hour. Well, they're going to now want to go back and average in a year or a year and a more to make them variable income. And now the income isn't going to work. Whereas if you ask up front, every single week, do you get 40 hours? So that's a common one. And then again, the business it's the kind of business, as everybody listening knows, it's one here, it's one there. You got a traveling nurse and they're getting housing reimbursement, which isn't W-2 income, but the loan officer doesn't realize that it is. You got somebody that did a cash out refi 2 months ago. They took 100,000 cash out. And now they got 110,000 in the bank, and now they got a different owner-occupied property they want to buy to use 80,000 of that money for the down payment. They want to keep the existing house and let their kids live there. And of course, they go to the closing and they say they intend to stay there for 12 months when they did the other owner-occupied property. And there's no Fannie Freddie rule that says that they can't get a second primary residence in 12 months. But it is up to the underwriter discretion. And in the scenario I just went over, it's likely they're not going to go for it. It was 8 months ago and they did a rate and term refi, and now they got to move their elderly parent in, and the parent can't handle the steps at the existing house, etc. That might be okay. So it's the one little thing here, the one little thing there. And it's a tough business. It takes a long time to get to be a really professional loan officer. where you close every loan that can be closed, and you don't tell anybody they're pre-approved that isn't. It's a long process. And all I'm trying to do with the software, my personal help, is to speed up the process. It's not from day one, just turn somebody loose. It's just, how much faster can they get ramped up? How much faster can they become confident? How much faster can they come across better to the customers, to the realtor partners, so that they have confidence in them? How much sooner, as the branch manager, do you feel comfortable turning this person loose so that you can spend more time on your own production, or hiring another newer person if you find a good one to ramp up? I don't know if that answered your question, Gilberto, or not.
It definitely did. And like, one of the things I was curious to know, for like a new loan officer watching that, like, let's say you had a new loan officer that's just, it's their very first day in a branch. What's the, I guess, top things that, let's say one or two things that you would instruct this individual, so that if they just knew this one or two things, they would mess up less? Like, what do you think that those two would be? It could be just for the 1003, it could be just in general, for the role.
Again, my expertise is narrow, but very deep.
Yeah.
And so when you're a new loan officer, you pass the test. And the test isn't easy. You had to buckle down and study. But of course, the test, taught you how to be a RESPA attorney. It didn't teach you how to be a loan officer and structure transactions. So the number one thing that I would say, one way or the other, whether you use our software and my services, there are some competitors of ours out there. We think we go further than any of them, but there's still some good competitors out there. One way or the other, still apply yourself and study for 3 or 4 months. Unfortunately, I had a conversation with a prospect this week, and the problem with the branch managers and the owners, they're afraid if they buy the software that the loan officer won't use it, right? If you give them a tool, they won't use it. And the one prospect this week put it very succinctly. He said, the people that will study can't sell, and the people who can sell won't study. Okay, so we do have a method to get the people that can sell to study. It does require some buy-in from the owner or the manager. This is why we also have the mandatory personal interaction with myself, so that there's training sessions on top of the software. The software by itself should be enough. If somebody just applies themselves, and we have plenty of customers that have applied themselves, but they tend to be older, more serious, have had a prior successful career. They're willing to come in and they know it's going to take some effort and put it in. That would be my main advice. Learn the guidelines, learn how to structure transactions, get it done however you need to do it. So again, you reach that takeoff point. Everybody's entitled to have a question once in a while before they make a decision with the borrower and the realtor. You don't want to be doing that on every loan. You don't want to have to come back 3-4 times on every loan asking questions. So get to the takeoff point where you can more or less operate on your own as quickly as possible, and especially in today's environment. That'd be my number one recommendation.
Love it. And for the branch manager or, broker owner that's watching this, and, they see the value in it, and this is something that would be perfect for them, like, how can they reach out to you? How can someone reach you?
Yeah, so you've been to our website. It's the word THE complete 1003.com, thecomplete1003.com. You can go on there, you can check us out. You can fill out a form, you can get right to my calendar, book a demo. And I'm a lot more worked up on this interview than I am when I'm one-on-one trying to help somebody, because you've brought out what I hate about the business, and so I'm all worked up. But if I have somebody who's new or somebody who's bringing on newer people, I'm more relaxed with showing them what we have, and we're low key. If we're for you, we're for you, and if we're not, I hope you find another way to get the job done.
Alan, I really appreciate you hopping on. You've shared, I mean, it's clear you have like a really like breadth of knowledge, and with the experience that you have and like the amount of loan officers that you've helped. I know there's clients that we have that would definitely find value in this. And so yeah, I just really appreciate your time, and then also just breaking down, a couple things that I feel like would bring a lot of value to loan officers that don't want to drop the ball and don't want to lose realtor partners. So definitely I can see how like a service like yours could definitely be even more necessary now because of the current marketing conditions where every loan counts, and like you don't want to drop a realtor partner or a loan and lose a client.
Thanks for having me on, Gilberto. Right. The last thing we want is after they engage you to go get the realtors to then drop the ball and kick it out of the back of the end zone. We don't want that. So
Exactly.
looking forward to maybe working with some of your clients. We have different services and we'll see if we can help somebody out. Thanks for having me on again, Gilberto.
Absolutely.